Hello, everyone, and welcome back to the J22 Report. I am your host, Johnnie Market. You all know that drill. Hit that like button, subscribe if you already haven't, or give me a follow on Rumble. And I just want to do a video today, day after Thanksgiving. I did have work, but I am done, and just wanted to talk a little bit. So, just do a little disclaimer nothing should be construed as financial investment advice, just my opinions. And I did a little different video today since the market, nothing's changed since my original forecast. Trumphoria probably doing well for the rest of the year, crypto. But I wanted to get back to oil. And if you look at oil right now, gosh, all right, good. I'm glad I got rid of this. If you look at the current price right now, oil's around $68 per barrel. And this is one reason I said, like, the drill baby drill will not reduce oil prices or the cost of living. If you look at it, oil's gone down. It's pretty low. If you do a 5-year chart, oil did start going up, but it peaked in 2022. Now it's at 120, but now it's really down, and I think will go back up. But now let's go to show you why is I always say you got to look at things as is and not how you want them to be. And one example is one of the reasons oil came down was the dumping of the strategic petroleum reserves. And I'll just do a perfect example to show you. This was Obama. If you look at the date, June 23rd, 2021. Orders the release of 30 million barrels of oil from the reserve. Of course, this was he was doing this during the Libya war. But if you look at it, let's go to that's 2008. But if you look at the oil market right here, this is around 2011. If you want to make sure, it's right around here. It's about 109, $110 a barrel. Of course, what happens? It goes down. The next high point was 105, but it went down. And eventually, oil came and went. Well, Saudi Arabia is when it really went down for the count in 2014. But this stopped the market from coming down. It stopped the market right in its tracks. And I don't think under Trump we're going to be dumping oil. And if you look at it this year, oil was started out at 76 and it's now at 67. And one of the reasons is Biden to release his White House 1 million barrels of gasoline to reduce prices. And so, from a price standpoint, this does create oil being sold into the market. So, when this stops, drilling you can argue a lot of things. Now, oil's not like a mine, but it takes a couple of years to get into place, like the fracking. Like the fracking revolution came, I'm just going by memory, because of all the policies of George W. Bush about deregulation and whatnot, but Obama really reaped the benefits of it. And it was higher oil prices. So if you look at it here, though, drill baby drill is probably not going to be enough. Oil prices were high, I think, eventually, as soon as they started pumping. But for the most part, it won't because, and not only that, a lot of foreign entities, I think, will start cutting production. But don't get me wrong, this was the pandemic, but under Biden, the first couple of years, oil really went up. But if you also look at it, 2022, oil was at 118, now it's at 68. Do you think things cost more now, or they do what they do in their 2022? Still costs more now. So that's all I wanted to show you is that uh, even though I think it's horrible policy and we need it in the future, and those things were not an emergency and they were probably political, they still kept the oil market afloat. And just talking about the markets, I mean, I sound like a broken pattern, but if you look at ever since the election, you look at gold, which started out 27.43, now 260. That just shows we're in Trumphoria because gold is actually the most uncorrelated asset with the market. But if you look at this is the Dow Jones, the market started at 42, now it's at 44. It's really done well. This is the Dow Jones. But in terms of this year, let's do year to date. Gold is up 28.83 and the stock market's up 19. So gold's still outperforming the stock market. And if you look at GDX, a lot of people say that gold stocks need to do well when gold starts outperforming the market. GDX up 21%. So it's underperforming gold, but it's outperforming the Dow Jones GDX. So that's one reason I think they say the stocks are doing well. I think it's because of gold going up a lot. So just interesting things to update on. And let's get into the couple of articles. Let's say two articles I had. Gosh, I forgot let me see if I can find this. Uh, if I can find this. It was unbelievable. It was such a great chart. Ooh, we will. I will talk about this next. So anyway, but let's get into this. Wall Street, let's go in the economic data. I didn't really see any today, but if you look at it, markets widely expect the Federal Reserve to cut interest rates for the third time in December. If you ask me, I think they'll cut in December. I don't, it's going to be hard. Sticky inflation prints and evidence of growing solid have raised doubts that the Fed will bring down rates as quickly as previously indicated. So I think either inflation really go up or we're going to get really bad economic data. Either way, I think gold personally will do well. But markets are currently projecting two rate cuts in 2025. So that's what they're projecting, two rate cuts. I think that's a minimum. I think they'll probably cut more. As we head into 2025, we'll likely see a slower pace of cutting going forward, where the Fed likely moves it in every other meeting sort of pace. See, that's what I don't get. If they're going to just do it every other meeting, why don't they just do all the cuts now? Let's say they're only cut three times. So, like, all right, instead of doing a 25 basis point cuts and doing it, we'll just do 175 basis point cut and just leave it there. And then we don't have to worry about cutting. I don't get it. It's stupid. Look at this. Current range 4.5. There's a little debate over where the Fed funds rate is restrictive. This means economists are likely to believe further easing well ahead. So the thing is, if you look at the PCE in my earlier videos, it's nowhere near the 2%. So I don't think the Fed, I would love to like call the see Congress, it's never going to happen, but call out the Fed and just pass a bill that says you can't lower rates until there's 2% inflation. You have to keep going. So yeah, look at this. Inflation progress stalls. So there it is. You know, I went over the PCE numbers. I don't think we need to go. This is just all gobbledygook. So anyway, as you can see, they're going to need worse economic data. So if there is an inflation shock, I think gold will go up. But if it's like up a little, I don't think gold will do that well. So let's go into the other things here. This is a U.S. personal saving rates revised down $140 billion in 2024. Savings rates for August, September were revised down to 4.1% and 4.4 from 4.6 to 4.8 initially reported in October. 6 months were revised down in total. If you look at the personal savings rates, none of this was revised down. But if you look at it from starting in April, that's when the revisions started coming. And so this red is more like the real. So if you look at it though, just generally speaking, this is why I said people can't save, credit card rejections. This is not good. So I want to give credit to, let me see, I'm going to give Jordan Roy Byrne. Let's just see if he actually has his chart on Twitter. Let's give credit to where credit is due. First of all, I want to give him credit for that cup and handle. He's the only one. He has nailed it so far. So I don't think. Yeah, he said record inside selling, all fair. Not bearish for the. In fact, no, insider selling peaked at least a year before a market peak. So here it is. This is his video. Gold is the most uncorrelated. Bitcoin is the most correlated. Should have posted that chart. That would have been cool. Let's see if we can actually get the chart though, or is it just his YouTube? So, but yeah, he had a great chart. I'm gonna go. Just want to give him his kudos. But yeah, if you look at it, this is basically what he was saying. Coin general. Of course, this was in 2023, but not much has changed. But yeah, if you look at it, Bitcoin, the Nasdaq, just it is a proxy. Just goes with the way it is. It is the same reason why you buy uh, Google and all those other ones, Apple. It's why you buy Bitcoin. You have to bet on economic growth, the US economy. I just want to say this is such BS. Currencies not to be taxed. This is like such. If you're holding crypto, there's no immediate. I don't know what they mean. So cryptocurrencies. Uh, Trump to not tax cryptocurrencies. Let's see this because this is such BS. I was reading. Look at this. Trump's bold move to make cryptocurrencies gains tax free. Why not gold and silver? Like if cryptocurrency, it should be on US issued cryptocurrencies. Tokens created by a U.S. company. So yeah, why not gold and silver? I mean, the thing is, cryptocurrency, it's not money. It's not, if you look at how, if you look at how it trades, as I just went over, let's play on Apple, Google. So anyway, I think that's complete corruption and lobbying. And to show, I was going to say, to show how bad sentiment is, I remember Zero Hedge used to be a pro gold site, pro precious metals, everything. And now it's mainstream media. This is politics. Unforgivable. Economy very All right, so that's an economy one. Are they planning a false flag event? Zelensky, Putin, federal government. So that's Doge, Haitian migrants, Hezbollah, political tribes. But if you look at it, if just looking at Zero Hedge, Jay Bhattacharya, and I know I pronounced that right, Bhattacharya. I have a friend with the same last name. Looming Trump tariffs, Syrian jihad. It's all politics now. It's a political station. Very sad to see. They used to cover the markets. Maybe it was considered doom porn, but anyway, that's all. That's my video. I wish it was there was more to talk about, but hit that like button, subscribe, and I will see you next video.